So let's talk about the market and business models and where startups can see opportunity. If you think about layer one projects, I think there are a 5 to 20 multi-decade kind of rollout adoption scheme. And so the funding and the project size, everything has to support that kind of rollout because it's a pretty massive project. But if you look at smaller projects that are on the application tier, that are probably on the middleware tier, they need a more realistic go-to-market and a realistic timeline to show traction for the second round of funding and the third round of funding. And today, I think there is a gap where Series A investors are not able to get the conviction on the middleware, probably not on the middleware, on the app layer, And so you're able to seed fund companies on the app layer, but they're not able to show meaningful traction for the Series A. So what do you think is happening there? And do you see that changing in the next 2 years?
So I think number of things to touch base there. So historically, I would say in 2017, 2018, what I used to see as in being on the investment side of things is that you would be fine until your Series A. You could get your couple $1 million and then likely work till a Series B. And because of the hype cycle, it's likely that you would have been able to close Series B. I think what's happened in the last year or so is that conviction has reduced drastically to a point where that check is happening at Series A, like you rightfully said. I think it's the classic curve that happens in every startup ecosystem, is that when you have hype going on, you have a lot of people willing to take early stage bets, but the moment capital dries up, you have what you would say. I don't want to use the word culling because it's quite insensitive, I would say. But what you really have is leaner teams that are more efficient, coming out stronger than earlier. So if you look at, of course, you're a founder, so you would have noticed this. If you look at the startup ecosystem in blockchains in the last year and a half, you're seeing more and more teams cutting down. But what that means is it's easier for you as a founder to get to an investor, and it's easier for an investor to make that decision early on. So I need to verify this with data, but it's likely that we've seen larger Series A's and Series B's in the last 6 months, and that would likely trickle down to seed stages too. We would have fewer deals, but larger ticket sizes happening, which in turn is good because now you have startups that don't need to compete against 50 other players. They have like 3, 4 other players, each of them carving their own niche and having enough capital to go to market. I think that's the law of markets, and that's fine. But I think coming back to the is it harder being in the application side? It definitely is, because your runway is much shorter. The metrics on basis of which your judge is very clear. You need to have a very clear business model. But I would say that if you can crack these things, the opportunity is still, in fact, larger than before, because two things, right? Like one is you have funds sitting on dry capital, like Anderson Horowitz just raised their almost $500 million this last week. There's likely more coming. So you have funds sitting on dry capital, waiting for fewer teams with larger checks. So if anything, it's good. But of course, it all boils down to Bitcoin's price, really. Now with halvening, if you're going to see another trend back to, let's say, 12, 13K, you will have a bunch of new teams coming in. Again, that's just markets being markets. You can't really change anything about it. But I would say now is a good time to be a good founder. If you have things in place, it's great. I think there's a lot of empathy out there too. So one of the things I keep trying to do is to reach out to founders and say, hey, if I use their product, I let them know that it was good and I appreciate what they do. I think that finding a new opportunity, if you quit a startup now, might be easier because people are more empathetic, I would say, and they also have your track record versus what the situation was earlier. So it's I wouldn't say this is something specific to blockchains, right? You take any hype cycle, you've seen the same stories play out.
Awesome. The only one addition I would say to that answer is that it's always a good time to be a good founder. Good founders can survive anytime,
Yes,
so
yes,
it doesn't matter.
absolutely. No doubt about it. It's always a good time to be a good founder.